Hello traders, Gary Wagner here. It is 12 noon in Honolulu, 6 o'clock in New York on Wednesday, 11th day of September 2024, and this is the evening report for gold and silver. Today, market participants reacted to the latest CPI report, which dramatically changed and lowered the probability of a 50 basis point rate cut by the Fed next week. Gold opened at $25.45.90 and closed at $25.40.20 for a decline of $5.50 on the day. Currently, gold is trading overseas up 80 cents from the New York close at $2,541. Silver gained almost a full percentage point today, a total of 28 cents, taking the most active December futures contract back above $29 to $29.50. Currently, overseas, silver is up an additional 4.5 cents at $29.05. Dollar strength today only had a marginal impact on both gold and silver pricing, with the dollar gaining 0.28%, taking the index to 101.403. There is really only one major report due out tomorrow, the Producer Price Index, that the Federal Reserve will use to make their final decision on monetary policy and how deep of a rate cut they will implement at next week's FOMC meeting. That dramatically increased the probability that the Fed will approve a 25 basis point rate cut at next week's Open Market Committee meeting. The report today showed that annualized inflation is currently at a rate of 2.5%. That's down 0.4% from the levels in July. However, the Core CPI, which excludes volatile food and energy prices and is the Federal Reserve's preferred inflation measure, remains steady at an annualized rate of 3.2% for the second consecutive month. Traders are currently pricing in an 85% probability that the Fed will enact a 0.25% rate cut at the September 18th conclusion of next week's FOMC meeting, which is why when we look at a half-an-hour standard candlestick chart, which I've just put up, with today's data beginning here, that the largest candle and the largest decline in a half-hour period occurred right after the release of the report at 8:30 over the next half hour. While gold only declined by about $5, I draw your attention to the daily high that came in at approximately $2,558, $2 shy of what we have labeled as major resistance at $2,560. We are still trading within this confined and restricted range that gold has traded in after the surge of over $50 occurred on Friday the 16th of August, which took gold from below 2,500 at $24.94 up to a closing price of $25.45. Since that point, gold has not been able to climb above $25.60 on a closing basis and has remained range-bound, which is why I really don't think that tomorrow's PPI, Producer Price Index report, will change the landscape dramatically. Where we did see a large move to the upside or moderate move to the upside is in silver today. Yesterday, we talked about the fact that the 2-day piercing line pattern we identified had a partial confirming candle. To have a confirming candle, you need to have a higher high, higher low, and a large green candle. It did trade to a higher low yesterday, as well as a higher high, but the body size is more characteristic of a doji than a large bodied candle. And therefore, we said that it was only a partial confirmation. Today, we did get a full confirmation of the piercing line in that we have seen silver move from the lows of 28.26, closing just around the midpoint at 28.70 a few days ago. Yesterday, a small doji-like candle, and today's 1% rise in silver. If silver continues to climb, which I believe it has a high likelihood that it will, the first level you would want to look at would be at approximately $29.80 based on the closing price on Thursday the 29th and the opening price on Friday, August the 30th, with the best case scenario taking silver beyond $30 to just above $30.35. This has been Gary Wagner wishing you, as always, good trading. We will talk to you tomorrow for the next daily update and review. Bye-bye.